Hello and welcome back to the channel. I'm Sam and today we'll be analyzing gold's performance and what this could mean for your trading strategy. So make sure to stick around. With over 27% gains in 2024 and 10% year to date, everyone's asking, why gold? Here's what you need to know. As of now, the price stands at an impressive $2,911. But hold on to your thoughts, because analysts have upped their year-end target to a whopping $3,100 an ounce. So what's behind this golden surge? Well, it's all about central banks stocking up on gold and a massive influx of money into gold-backed ETFs. These factors are giving experts a bullish outlook on gold's future. According to the World Gold Council, after 15 consecutive years of increasing global gold reserves, there's no indication that demand is slowing down. With rising anxiety over US trade policies, especially those new tariff threats, gold is becoming a go-to haven asset. But that's not all. Weaker US economic data and the buzz about possible Federal Reserve rate cuts are also pushing gold's price higher. For starters, gold, unlike other assets, doesn't generate any interest. So what's the deal? The answer lies in its unique role as a safe haven and store of value, particularly during periods of economic uncertainty or when yields on traditional assets are less appealing. Let's talk about retail sales for a second. When retail sales are strong, it's usually a sign that people are feeling good about spending, which is great for the economy. But when they start to slip, it can be a red flag for slower growth, and that's when traders start paying closer attention. Everyone is wondering what the Federal Reserve might do next. If consumer spending stays weak, there's a good chance the Fed will start cutting interest rates. And that brings us to gold. When rates go down, gold becomes a lot more attractive since it doesn't pay interest. So traders should keep a close eye on these numbers to see how the Fed will react and how gold will respond. On the other hand, the appearance of a shooting star candlestick on the price chart raises concerns about whether the bulls are strong enough to push the precious metal to new highs. Also, the negative divergence between the price and the momentum oscillator, along with the relative strength index, re-entering the overbought zone, suggests an increased likelihood of a downside correction. If favorable conditions continue, gold's next target is $3,199 per ounce. Conversely, if sellers take over, $2,789 may prove to be a strong support level. In a nutshell, the price of gold is rising due to a combination of factors including inflation concerns, economic uncertainty, geopolitical tensions, and a weaker US dollar. Investors often turn to gold as a safe haven asset during times of instability, driving up demand. Additionally, central bank purchases and lower interest rates reduce the opportunity cost of holding non-yielding assets like gold, further boosting its appeal. So what do you think? Are we on the verge of a new gold record high or correction? Let us know in the comments down below. And don't forget to like, subscribe, and tap that notification bell so you're always in the loop. Thanks for watching, and I'll see you next time.